So let's start now. Okay, I'm going to be today I want to discuss about how to predict the next candlestick. Okay, since all this while we have been trading on how to we have been discussing on how to predict the next market direction, whereby you use 5 minute expiry time, 2 minute expiry time, or 3 minute expiry time. But this today class we're going to discuss on how to use 1 minute expiry time. Okay, how to predict the next candle. Give me a second. Okay, so I shared these 5 things I consider mostly before predicting next candlestick. Okay, I think I shared this in the WhatsApp group. So I'm going to explain step by step on how to predict the next candles using these 5 rules. Okay, so there are different ways of predicting candles. So let me just say there are different ways of predicting next market direction. You can predict next market direction by predicting one single candle, or predicting the next market direction by using multiple candles. Okay, so in today's video, or sorry, in today's class, I'm going to show you on how you can predict the next candlestick. Okay, following these 5 steps. Okay, so the first step I mentioned here is the key factor. The key factor. When I talk about key factor, I'm talking about SNR. Okay, SND is not exempted, but basically this is binary trading. So I'm talking about SNR, key factor. Okay, SNR, whereby support become resistance, or resistance becomes support. This is key factor. Okay, or you can just say using the resistance level, or using the support level. Okay, resistance level, support level. Okay, so but one thing you should know, that when we are drawing support and resistance, you are drawing it as a um, zone. Okay, not a single candle. You should draw it as a zone, because when we talk about support and resistance, this is an area where market reverse. Imagine when I say an area, I didn't say level. An area where market reverse. Take example at this level here. When price reverse from this level, it come here. There's the price was trapped around this area. Finally succeeded. The sellers giving, the buyer succeeded in pushing the price much further. If you check on the left side, where do you find the next level? This level. Also, we have some trap zone here. Okay. Then when the price finally reach here, the market start misbehaving like they decided to go up. Maybe they want to go up, or maybe they want to go down. If the market is trapped here, it is more likely possible that the price will still continue, just like what happened here. The price is trapped here, so it continue. Maybe the price is also trapped here, maybe it might continue, but see what happened, the price drop. Okay, so let's say for instance you want to predict the next candlestick. You look for what? The key factor, the support and resistance. You look for the support and resistance. Now let's assume the price is approaching the price is moving forward. Now there's one thing I want to tell you about um uptrend or downtrend or level or where price movement. Okay, when you see a movement like this, always trade the support and resistance using a movement like this. Okay, always trade support and resistance using a movement like this, like movement. I'm not talking about movement like this. This is not a movement. This is a mature movement. This is a consolidation. Avoid whereby market consolidate at the resistance. Do not even bother to predict any candlestick if the market is consolidating or moving sideways. Always trade if the markets have a mature movement like this. Look on the left side where you can think possibly the market is going to reverse. Then you place your trade. Do not trade if the market is consolidated. Maybe you just open the chart and the current price movement is something like this. Avoid it. Do not trade market where thereby the market is consolidating. It's not easy to predict candles. In that kind of situation, it's not easy to predict candlestick. Same thing here. Okay, let's say for instance you draw a level here, then price approach the level and reverse. That is all. Leave the market. Leave that leave what leave Go to the next chart or wait for the next opportunity to surface. Do not decide to predict next candlestick again if the price approach the level. This is when the market will start consolidating. Then another thing that usually happens is that market might still decide. For instance, this is a level. Let's say this is a support level. Market might still decide to go up, change the direction to the upside. But if market did so, it might just consolidate, 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 and finally continue. This is the problem that we face mostly, especially in forex market. Okay, consolidation and fake move. Okay, but in binary, it's easy for you to predict next candlestick. What I mean is that when you see the market approach the level, this should be your entry point. Ignore all these movements. Look for next opportunity. Next opportunity should be after you draw your support level here, support area here, wait for the price again, maybe wait for the price. The price might decide to go up, but in this case, it didn't go up. Wait for the price to break the level and wait for a pullback. So once you wait for a pullback, then place your trade just like this. Remember that I said earlier on that when you are drawing support and resistance, you should draw it as a zone. Okay, not a single candle. Draw it as a zone. Okay, in this case, the way I see it, this is the correct zone. If I should draw one single candlestick, I know where I can place the line. If I should draw a correct zone, this is the correct zone. This is what I mean. Okay, remember, if you guys remember sometime last year, I I have a class with you guys on how to draw support and resistance. Maybe you should go and watch the video on how to draw support and resistance, like different ways, using the wick to body or body to body or body to wick or wick to wick. Okay, I show you different ways of how to draw support and resistance. In this case, this is the zone I'm talking about. Okay, this is the zone on how to draw support and resistance here. I didn't include this rejection because this is just like a shadow. This is all this lower rejection, they are just like a shadow, so I didn't include it. And include how the price reacts, the body, how they react when they reach the level. If you look at it very well, if you look at it very well, I draw the first line here connecting the bottom of the level, then the second level, the second line I should draw is here. Then if you look at it very well, you see that market reverse, market reverse, market reverse, market reverse here. This is the trap zone where thereby the market decided to go down or go up and finally break the level. Those are the trap zone. If you check on the left side, you also find out the same thing. You can see market reverse. Okay. You can also see the market was trapped here until finally find its way to the upside. Same thing here. Market was also trapped here. So that is why I decided to place the line here. If I should place the second line here, well, you might see the market reverse in some cases, but like something like this, it reversed here, which means I can decide to use three lines, right? I can decide to use three lines because it depends on how you should wait and see how the market react on those lines. If the market decided to reverse because of this zone, fine. Okay. Or if the market decided to reverse because of this zone, you know that we have two zones here. The reason the first zone is here, the below, using the wick here. Like I said, wick to body. The second zone is check on the left side, find my the trap zone where market was trapped in the past before it finally break to the upside or downside in a situation like this. Okay, like here, this is the reason why the market reversed here, and here the market also reversed here, but this time it reversed on the second zone like the trap zone. If you check on the left side with the second line, I mean this line, this zone, these two lines form a zone. Let's check what happened on the left side. Let's see what happened. Okay, you see that market reverse here. Also, you see that it reverse, then multiple rejection, but this time it breaks. Okay, so that is key factor. This is how the market reacts when the market is moving. Now, this is another scenario. This is what I say you should avoid. Whenever you see the market moving sideways like this, do not attempt to draw any support or resistance here. Okay, or you can simply draw the support zone just like this, but I will advise you stay away. Always choose the correct level to draw, or don't even decide to trade on the next one. For instance, you draw a zone here. Let's say you draw a zone here and you see the market approach the level and reverse. This should be your first entry point. Don't pay attention to the next level, to the next time the market visits the zone. It might not consolidate. It might consolidate and it might not consolidate. Okay, the buyers might just enter and reverse to the upside, or the market might consolidate for a while and continue to the downside, or it might just reverse immediately. Sellers kick in and move to the downside. So avoid next entry. Avoid the next time the market visits the zone. Okay, it's not safe. Okay, so now as the market is approaching to the downside, this type of market, this type of trend is not mature. Okay, like I said, always trade a mature trend, something like this. Then look on the left side. Avoid sideways market. So if I see any mature movement, then I will decide to draw next level of our support, which is right here. This is the next level of our support. Remember, support area. Next level of our support. So now let me go to the left side and find out if it respects it or not. Okay. Uh, I'm not using this as a resistance. I'm using on the left. I will use on the left side to draw, to use as a resistance, not this. Okay. Not, no. Don't ever think the market will come back again and use this resistance to reverse. No. So I'm using again the left side, but I don't see the market is still mature. So if I see any strong downtrend, then I'll be looking for uh, buyers at that level. So these are the key factors. The next one I mentioned about the next one I discussed is the trend, minor or major trend, minor or major trend. Okay. Now look at this chart. Now, if you look at this chart, this is the major trend because the price seems to be falling. Okay. Now that is the major trend. The minor trend, what do you see? The price start falling from here, though it rises from here and starts falling from, so we have the low and we have the high. Now the current price, which is the major trend, is that the price start falling downside. So it start falling to the downside. That means we can expect the price to be in a downside form. Okay, we can expect the price to also be in a downside form. So in this case, I'm not expecting the price to go up higher. But here the movement here, the current movement here is still British. So here, this kind of movement, we call it minor trend. Okay, we call it minor trend. So what do we have here? We have two trend now. We have the major trend and we have the minor trend. The major trend is down. The minor trend also is down. So as the minor trend is down, the major trend is down. This is where you should be looking for buy opportunity or call option. Or if the major trend is down, this is where you should be looking for um, resistance or look for any resistance here, something like this. Okay, but the major trend, the minor trend is still down. Where should you be looking for market to reverse? Here. Okay, this, look for next level where the market might definitely reverse as the major trend, the minor trend is down. Okay, the minor trend is down. Look for where the market might still reverse. Okay, here you see that market reach the level which is right here. Let me draw the second line and let's confirm on the left side to see what happened. You see it reverse, it reverse. You see that it reverse here. Okay, at least three confirmation is enough. So here we see that when immediately the price approached the level, there was a huge selling pressure. There was a huge selling pressure. So the sellers rejected the buyers from this level, and that is why sellers entered again. Even though you entered a sell trade here, even though you enter a sell trade after this candle close, remember candlestick pattern is at the next one. Remember, even though you enter a sell trade here or put option here, you should know that your entry point must be safe. Okay, because you know that the definitely sellers might definitely enter from this level. That's what happened here. Strong candle without rejection, but immediately the buyers become weak. The sellers took the advantage and entered the market. Okay, so but I would strongly recommend that you should trade the first one. Okay, it's almost up to the buyers almost break this level. It's because they become weak, so they give in and the sellers enter the market. Okay, so now the weak candle or exhausted candle. When I talk about weak candle, I'm talking about candle that seem to be, even when you see the candle, you should know that this candle is weak. Okay, even though you see the market moving and you actually saw the candle, you should know that this candle is definitely weak. So what should I do about it? The candle is weak, it can't move further. Just like human being, if you are weak, You can't run a race of 100 meters if you are weak. But if you are strong, believe me, you can do more than that. Same thing also applies the market in markets. The market is weak, the price is weak, the buyers are weak, so they can't push the price much further. So the sellers took over. Okay, same thing here. This candle is not weak, but here the buyers become weak. Same thing here. This candle is not weak, but the buyers become weak. That is why sellers entered. Now, when I talk about exhausted candle, I'm talking about candle. Let's say, for example, this is a resistance, and immediately some candle just surface in the market, crossing the resistance. Okay, you see that the candle is being exhausted. A strong candle. It was moving smoothly, but something just came up in in their brain, and the buyer decided to be exhausted, just to buy off all the market, or just to buy off all the product, all the stock left. That is why they are exhausted. They will just cross the zone, and when they are exhausted, it is definitely sure. I'm definitely sure the market should reverse in such kind of situation. Okay, so weak candle and exhausted candle tend to be a reversal candlestick when you are trading one single candlestick, when you are predicting one single candlestick. The next one is reversal or a continuation candlestick. Reversal for corrective move, continuation for impulsive move. Okay, like I said, the most candlestick, the candlestick that we use for continuation move, that I like using for continuation move, is this. Okay, continuation movement, candlestick like this, whereby we have some bullish movement. Okay, this is bullish movement. The overall trend is bullish, right? That is impulsive move. Then the corrective move is when the price drop. Okay, but in this kind of situation, we have the this candle just form something like this. It formed, and this is a resistance level. So the continuation candlestick might still continue the price movement. The continuation candlestick might still continue the price movement, something like this. Okay, might still continue the price movement by pushing the price more further, or maybe continue the price movement to at least complete the movement to this point before it finally reverse. Anything can happen. Either continue to cover the space, or continue to much further. Okay, so this is a continuation candlestick. It is used for impulsive move. Now for corrective move, always check the trend. I can also use the same candlestick for corrective move. It depends on the trend, the price movement, the trend, how the market approach the level. Okay, it depends. Okay, if you study the candlestick very well, you will see that this candlestick can also be used as a reversal candlestick, and at the same time used as a continuation candlestick. Like this candlestick can be used as a continuation candlestick. It depends on the price movement and the level where it stopped. Okay, for instance, this candlestick form here, this candlestick form here, and where do you think the resistance is going to be? Let's say the resistance is somewhere around here. So what do you think is going to happen? Do you think the market will continue? No, I don't think so. The market might definitely reverse. Okay, because the closing body of this candle didn't cross the zone. So definitely the sellers might enter the market. Okay, so this pattern, this candlestick, or this price move structure is different from this one, which has something like this. It's different from this. Okay, this one is, there's still a gap. Okay, the price might decide to fill the gap, but this, there is no gap. The candle closed exactly at the zone. So we can expect sellers to enter immediately. Maybe there's a gap, the buyers might fill the gap and sellers entered immediately, or there's a gap, the buyers might continue moving upward. Same thing here is very easy. It's very more confusing that the price might also be moving upward here. So it depends on how the market want to move. Okay. These are like, when we are talking about corrective move and impulsive move. Corrective move is the trend, or is the movement against the major trend. The movement against the major trend, like this, like a counter trend, right? Just like a counter trend. If the market is moving or is an uptrend, let's say this is an uptrend market move like this. Okay, so all these are corrective movement. They are corrective movement. So when you are trading corrective movement, this is when you should trade the reversal candlestick. Okay, trade the reversal candlestick. If you are trading the impulsive movement, this is where you should trade the continuation candlestick. Okay, uptrend move, trade the continuation candlestick here, trade the reversal candlestick here. Okay, you see that they are different. This is for the corrective move, this is for the impulsive move. So impulsive move, trade the continuation. Corrective move, trade the reversal candlestick. Now take a look at how the market is moving here. This is what we call uh, downtrend, impulsive and corrective move. If you look at it very well, this is impulsive move, this is corrective, this is impulsive move. When the price reach this level, what do you see? You say, then the price reach this level, what do you see? A shooting star, okay, a red shooting star. That is why the price dropped. That is for the impulsive move. Okay, this is the corrective move. When the price reach this level, what do you see? Some hammer candlestick, like a pin bar, hammer, something like that. Now the price again drop and reverse again. If you want to trade the continuation to the downside, you look for the impulsive candlestick, which is this. This candlestick, we call it indecision. Okay, indecision. Okay, because the upper and the lower rejection are almost the same. No, the buyers cannot decide, the sellers cannot decide. But because of the price movement, it is called indecision. This is the key area, key factor. So we have the indecision candlestick at the impulsive move to continue the trend to the downside. Okay, here we have the bullish hammer at the corrective move, at least to make some retracement. Okay, bullish hammer. So when price drop, it continue again and drop again. This is also the corrective move. Here we have another level here. Where do you see, if you want to draw next level, where are you going to draw the next level? Okay, next level, you can either draw next level using um trend line as well. So it depends on how the market move, the structure of the market. Okay, let me use the trend line. Okay, so here we have the trend line movement. We have the trend line movement. Okay, so when the price reach the trend line, touch the trend line, also it reverse because of this zone. So because of this zone, we have what? The impulsive candlestick, which is indecision. Okay, look at this. The reason why the market did not reverse, because this is not indecision. This is the lower rejection is longer than the upper rejection. So it's not indecision. It's just like this. Lower rejection but no upper rejection. Look at this. Upper rejection but small lower rejection, which this indicates to us that the sellers are more powerful. Here, the buyers are more powerful. That is why the buyers did not give up immediately. But this time, the buyers and sellers are almost the same. Here, the buyers also are more powerful. Here, also, the buyers also are more powerful. But this time, the buyers and sellers are the same. That is what gave the sellers opportunity to go more down. So we have the impulsive move, impulsive corrective, impulsive corrective, impulsive corrective, impulsive move. Okay. Now this is another next. This is another key factor, another support level. We are trading. If you are trading there something like this, you should look for any reversal candlestick here. Like impulsive, corrective candlestick, corrective candlestick. So what do you see here? Corrective candlestick. And what do you think is going to be the next candlestick? For me, I will go with buyers. Okay, just like this one here, but this one, because the market is consolidating, maybe if the market might decide to consolidate here, I don't know what's going to happen. But if the market decided not to consolidate, I'm expecting a bullish candle next, because from the impulse, from the corrective, from this level, I can see a strong bullish candle that engulf the seller's candle here. So I'm expecting a bullish candle to form on the next one. So let's wait and see. So we see that this is a winning trade, because from the impulsive level, I can see, because this is a support level, from the impulsive level, I can see a bullish candle that formed, the strong bullish candle with a strong buying pressure. Look at the upper side. There was no rejection. That means there was no sellers activities at all. There's no sellers activities at all. So there's no rejection here. Now, as the corrective, the impulsive move, where do you think the sellers will enter again? Check on the left side here. Well, let me say here something like this. Uh, Something like this, something like this, something like this. Is it correct? Okay, I think so. So where do you think the sellers will enter again? You see the sellers entered here. So what do you think here? What do you see here? Now you see what I'm talking about? These buyers also pressurized the sellers because there was no rejection here, but there's a strong rejection below. So we can't expect the market to reverse. Now you see the buyers keep pushing the price down. And finally, they succeeded in breaking the upper trend line, whereby they failed multiple times to break the trend line here. They failed multiple times to break the trend, but this time they break the trend line. So as they break the trend line, what do you think is going to happen next? For me, like normal traders psychology, what we always think is if the price break the trend line, it should move according to the direction of where the trend line is being broken. So in this kind of situation, I'm expecting a bullish trend, okay, because the trend line is broken. Okay, so that is enough. Whenever you place a trade here, that is enough. Okay, now let me tell you one thing here. Immediately the sellers entered at this level, is got rejected at this level, the buyer should enter again on the next candle, because this is indecision. Remember what I said? Indecision candlestick, like spinning top, right? Indecision. Both candle, the candle has both upper and lower rejection, which is almost the same. Indecision. And if you check very well, if you look at it very carefully, you will see that the lower rejection is even more stronger than the upper rejection. But the body, if I should say, let me say out of 100% spinning top, I will call this 80% spinning top. Okay, because it's almost the same. Okay, it's almost the same, so I call it 80% spinning top. So that means I can expect the buyers to enter the next candle. And if the buyers enter the next candle, also take note that the candle formed exactly from this zone. So we can expect buyers entry. Now, where do you think the next impulsive move, the sellers might likely to enter. This is the next impulsive move here and here. But fortunately, there was no rejection here, but there was a lower rejection, this buying pressure. Again, the trend line couldn't stop the buyers. There was also a buying pressure. That is why you see that the minor trend is now bullish. So what next? Entry points. Always avoid late entry. This is the most important thing in trading. Honestly, I I can predict 9 candles in the board. The problem about it is the way I enter the market, the my entry point. Uh, is it on Wednesday? I decided to martingale. I decided to turn, is it $30 to $100. Uh, to From $30, I grew the account from $30. That was my circuit trading, though I didn't share the signal. I'm just using 1 minute expiry time and 1 minute candle. So I started with $30. That maybe on Tuesday or Wednesday. I started with $30. I grew the account. When I reached $816, the last trade I took, I'm doubling the account. I just put all the money. The last trade I took, it was that is what keeps my trade. That's what keeps me. That is the problem I have on that trade. Late entry. My position is right. Everything I did about the trading is right. My analysis is right. Even the direction I predicted the market is also right. But you know, they are the last time the moment I reach 816, just to double the amount of, let me say, more than $1,000, I just lose the whole money because of late entry. So this is the most important part. Once you know all these steps, the last one, which I indicate this as number 5, is the problem of most of us in trading. The problem of most of us. Avoid late entry. Your prediction is right. Your prediction is right, but avoid late entry. Okay. Um, Let me see one more example, and we call it a day. Okay. Now, yeah, this type of market, I would say, whenever you are seeing a trap market, avoid trading a trap market, avoid trading a trap. But you can draw your zone from it. But if the market is consolidating, avoid. If the market come back to the zone, avoid it. Okay, except you see a mature trend approaching the zone, then you can place your trade there. Okay, always avoid consolidation market. So the first step is look for a key level, a key factor, key level. Well, I can say this is my key factor. This is my key. Those are my key factor. Um, yep. Those are my key factor. The resistance and the support. The next one says trend. Trend should be minor trend or major trend. Let's check what trend are we trading on. Well, the way I can see, the major trend is down and the minor trend is up. You can see this is what I mean. The minor trend is up. Maybe this is a correction move, but the minor trend is still up. So let's say we took a trade according to the trend. What is the next one? We have identified the minor trend and the major trend. Weak candle or exhausted candle. Well, if I should draw another level here, this level, this zone, I mean, not level, this zone, then look for a weak candle or exhausted candle. I didn't find any weak candle here, neither I didn't find any exhausted candle. Okay, let me do something here. Well, not what I'm expecting. I didn't find any weak candle and I didn't find any exhausted candle either. So I just have to skip this trade. Let's check another example. Okay, key factor, support, we are expecting to become resistance. Although it's a resistance here, okay, that is a good key factor level. Then support, also support right here. Um, yeah. So, like I said, do not predict my candlestick here. You have already drawn a significant level, okay? So wait for the price to reach the level. Then what next? Major and minor trend. That is the trend. So in this case, the major trend is down. Well, I know that the major trend is down. The minor trend also is down. Okay, the minor trend is down. What next? Weak candle and exhausted candle. So let's see how the candle will close around this area. If it is going to form a weak candle or exhausted, let's see. Let's see about that. Okay, the price has touched the zone. Let's see. Let's see. Let's wait and see. Well, I'm not expecting the price to break the resistance, but it's breaking it. Let's see, maybe the sellers will reject it. Remember, I talked about the exhausted candle, whereby the market just break the zone. But in this situation, I don't think is though this is exhausted candle, but I said something about being seeing a candle exhausted to predict the next candle. You might be seeing some movements, small candles, and finally at this level you just see a strong candle. That means the market is likely to reverse. Okay, but here I didn't see momentum or small candles, but this is an exhausted candle, so I can't expect sellers to enter. I can't expect sellers to enter. Well, not actually what I'm expecting. Remember this level also work here as a support level. That is another next key factor. If the market violates this key factor, maybe it's heading to the next one. Let up and see if the market will actually reverse when they reach that level. Okay, it work here, it reverse, and here, and here. Now the buyers are approaching the level. Finally, they reach the zone. What do we expect now is the um, weak candle and exhausted candle. Well, the way I'm seeing here, this type of movement is also becoming weak because it started with a strong candle and the size of the candle reduced and now it reduced and now this. We are seeing some upper rejection with small lower rejection. Well, I can say the buyers are weak. You can see, oh shit. You can see the sellers entered immediately. The seller entered immediately. That is a quick sell. Okay. There's a quick sell, like aggressive quick sell. No, let me not jump into forex because this is forex aspect. Quick sell, aggressive, quick sell. Just like when the price touch a level, the seller might just enter immediately. So I'm not expecting anything here to happen again. I'm not trading here. Okay, this should be um, an impulsive candlestick, but the sellers approach the level, and the way the buyers approach the level and sellers entered is not what I'm expecting. So I can't believe this. You can see immediately buyers entered. Assuming the buyers entered and closed as red, as close, and the candle closed as green, well, I'll be rest assured that price will reverse. But in this kind of situation, it seems to be more awkward. Something bad is about to happen because something like this, market might tend to move like this. Okay, something like that. Well, since the price didn't respect this, what is the next level here? Look at this resistance, resistance. Now look at what I'm talking about. After small candles or random movement, then small candles, immediately exhausted candles. So what happened next? Sellers entered. So this is another, okay, that's another resistance level. So you see that buyers become weak. Okay, let me draw it perfectly so that we don't make any mistake. I know sellers will enter. You see that buyers become weak after rejected from this level. Buyers become weak. So sellers entered. Even though the candle didn't close around this area, didn't reject, just didn't close around this inside the zone, we can expect sellers entry because the buyer is already weak. Remember when I said when you are trading reversal candlestick, you must expect the if you see something like this, where the next level is here, we can expect the buyers to fill the gap, right? Remember what I said some minute ago. But in a situation like this, the bias is becoming weaker. From strong candle to the body reduce, the size of the candle reduce, and here it reduce, sellers trooping, and here strong candle again emerge, and here it finally reduce. So it's a sign the market is going to reverse. But if you are seeing small candle, small candle, small candle, small candle, small candle, and finally big candles appears here, that means the small candle, as the price is increasing, the buyers are increasing in size, they might definitely push the price again to fill the gap. Okay. But in a situation like this, big candle reducing the size. So it's a situation whereby sellers will definitely enter. That is why I think the sellers will enter. Okay. That's why I said the sellers must definitely enter because the buyers are strong and they are decreasing in size. So here they decrease. Okay, they decrease. So I'm expecting sellers on the next candle. Okay, but if the buyers become like small candle followed by big, followed by big, followed by big, and this type of candlestick appears, it means the buyers will definitely continue to fill the gap. Okay, there are two different ways of trading: filling the gap and reversal. Now, because this trend is minor trend, this is the level the market choose to reverse, right? Well, I've taken one trade. I shouldn't bother myself to predict next candlestick. So that is a win trade. Now, this is the this is the high, this is the low. The low, the high. The market hasn't start moving corrective move and impulsive mode yet. But this is the high, this is the low, the high and the low. So market reached this level and it's likely to make some correction, but we don't know if this is going to be a true rate correction. So I've already won the first trade here. So I'll wait. I'll wait to see market to drop to this level. Do not make attempt to place any trade here. Okay? Do not make attempt to place any trade here. Wait for the price to reach this or this. Even if the price reach this level, do not make attempt to place any trade there. Already we are seeing a reversal. Market might just consolidate or might just continue or might just reverse. So we don't know what's going on. Even me, I'm confused here. So when I'm confused, I always wait for the right moment. That's why I was able to to the mitigate $30 up to 800 and something, and I end up losing the whole money at the last trade. The trade I took last. Although I was hoping to make more than $1,000, but the last trade blow it off, which was late entry. Okay, so something like that happened. This is exactly what I did. I didn't place any trade here. I have to wait for the market to reach this point or this. Okay. So in this kind of situation, it seems the market might likely to move sideways. So always avoid sideways market. So what next? This area. This is where I should expect the market to reverse next. Now you see the buyers enter the level. Well, if I decided to take any trade here, I will not definitely go with sellers. Okay, I will not go with sellers because I'm still seeing some levels here, some resistance level here. Okay, so but if they are towards the sellers entered, but that is not my prediction. My prediction is already here, so I've already taken some money here. So my prediction is not here, so I didn't put any money here. Wait for the right moment, this or this. So let's wait and see. Now you see what happened. Some sellers might buy, some traders might have decided to take a trade here. You see what happened? See what I'm talking about? Market, even at that moment, you will not see sellers entered again on the next candle. This is the confusion. This is where the market will likely to break, to blow your brain. Okay, I have experienced something like this. When I see on the left side market reverse, then I will now think of placing trade on the next candlestick. Before you know, I lost the trade. Immediately I lost the trade, the next candle will just reverse. I'll say, wow, this market is crazy. Why is it that the first candle I predicted didn't reverse? But after I lost the trade, the next candle just finally reversed. Wow, this market is crazy. I've experienced something like this. So something I have experienced, I should know, I should be telling you guys that it doesn't work like that. So something like this always occur. Some traders, though you see that the pressure is from above, right? And again from this zone. The pressure from above and again from the zone. Well, the pressure is from sellers itself. So some sellers might have, the traders might have decided to place the trade here, but you see, at the last minute, at the last second, the candle just closed as green. So they end up losing the trade. And the next candle here was also green. Even though the candle become weak, small body, though it's still had the buying pressure, but you can see the buyers continue to the upside. Now, let me draw the upper line, which I expect the sellers might likely to enter again. Um, Something like this. Now, next class, I'm going to explain um, shock and pressure. If the price approach the level, there's a something that usually happen, especially from in the aspect of Margoso. I always see something like that. I'm going to explain to you. That is exactly what happened here. Shock and pressure. The level might be here, but immediately Masbroso candle closed, the candle will just touch the level and reverse, just like this. You see what I'm talking about? The level is somewhere here. But this type of Masbroso just closed here, and suddenly the pressure pushed the price and short. Then the price closed as red. Next class, that is what I'm going to explain. Okay. But you see that the market didn't reach the zone, right? The market didn't reach the zone. Okay, that was my mistake. It should be at the close of this candle. It should be at the close of this candle, not the wick. Then the upper should be at the close of this candle. Okay, I think that was my mistake. So you can see the pressure, the pressure from buyers is too strong, but they can't exit more than just to close above this level. So they just succumb for the sellers, and sellers enter the market. Now they see the sellers are now pushing the price downwards. You see the price, the buyers still make attempt again. They are still getting rejection, but I'm not trading that one. That is not what I'm trading. I'm not trading break and retest. I'm trading. Um, I'm talking about uh, resistance support. Okay, so that is that. But if you look at this correction is too long. But I would say it's not valid. Well, the correction should be somewhere here. If the correction is something like this, then the market should reverse here. But there was no correction, there was no impulsive candlestick here. So there's no impulsive candlestick here. It's now finally go to the next resistance level. So the next support level should be here. If I see any impulsive candlestick here, then I know the price is going to drop. But there was no impulsive candlestick here. So I don't think the market is reversing. You can see the market didn't reverse, it moved up to the next origin of the trend. It moved up to the origin of the trend. So it's safe that way. Do not take this as corrective. Okay, it seems the market is moving sideways, ranging. Okay, we know that this is a ranging market. If the market is moving zigzag, you should know that the market is likely in a trendy market. So as the price is moving downward, where do you think the market should reverse? Remember I said this is low. I was thinking that the market is going to be moving like zigzag, a trendy market, but nothing happened. So, though we might still make use of this low anyway, but currently, let's see this. So, what is the trend right now? Well, the trend is still bullish because this is bullish and this is a corrective move. Is what I mean. Bullish. What's wrong with this mouse? Bullish, corrective move. So I'm expecting the price to move like this. Now, from the corrective move, I can see a strong candle. I think I should expect buyers to enter again on the next candle. Let me remove this. This is of no use again. Okay. So the corrective, the impulsive move, because this is impulsive move, this is corrective. So from this impulsive move, I can see a bullish candle, a strong buyer's candle. So I'm expecting buyers again to enter the next candle, or maybe the market is likely to consolidate. I don't know. Let's see. Actually, this is a losing trade because the market is still consolidating, or it's deciding to break the level. Where something like this happen, I don't, I don't accept that. So I avoid. because buyers might still enter again. Once the buyers entered, you'll be confused here. You will not know what exactly the market is doing. Maybe it's trying to break the level, or maybe it's going to reverse to the upside. We don't know. So avoid that. Okay. So if the market is consolidating here, what should be our next opportunity for entry? This level right here and this. If the market succeed consolidating to break to the downside, finally it should come to this level by kissing this level, or maybe it goes up by touching this level. So anywhere the market falls into, strong sellers movement. See, you can see buyers are no more interested. The sellers troop in and start pushing the price downward. So this is the level you should consider for next target. Remember, this level also is very important. This this level is also is very important. Price might still definitely break this level or decide to consolidate. It might just continue to this level. So we don't know that one for sure. But we do know the next target is here because they succeed in breaking this level. Now, this is correction move, right? This is impulsive move. This is correction move. At the correction move, what do you see here? What do you see here? A corrective candlestick where it's not something like above the level, but this is definitely below the level. Maybe something is happening in the market. The market is trying to create a spring by forming um, a corrective candlestick below the level. So definitely, I'm expecting a bullish candle here. I'm expecting a bullish candle here because this is more likely like a spring. You know what I mean by spring? Smart money traders. You draw a level, you draw a support level, and the market just reverse, touch the level, and break the level, and immediately reverse immediately. That's what I mean by a spring. You can see that I decided to go with buyers, but it was trapped here. They got rejected. The sellers still entered again. Sellers win the battle. So in this kind of situation, we can expect like maybe buyers decided to enter again, just like spring. Spring is where you draw a level, market reach the level and reverse. This area is what we call spring. Okay, it's what we call spring. You see that they break the zone, the market just reverse. So we call it a spring. That's exactly what I'm thinking the market is going to do here. But sellers succeeded after rejected here. They are heading to the next target level. If you are head bent, you can decide to go with sellers continuously, but I will not accept. I will not recommend that. Okay, just take your time, wait for the price to reach the level, and predict the next candlestick. Well, we can still the market reverse here, but I'm targeting this level. According to this momentum I'm seeing here, I don't expect the market to reverse so long. If the market didn't reverse here, if the market didn't reverse here, that means as this is now a minor downtrend, this is now a minor downtrend. I can expect the market to reverse exactly from this level to the downside. Okay, that is my next prediction. So let's see what will happen. This is the level I was talking about, predicting next target, next candlestick. Okay, because this is downtrend, this is downward movement. My corrective move, the next corrective and impulsive level should be here. So now we have a level whereby you can expect the market to reverse this or this. If the market reach this level, it's no more corrective or impulsive move. It's ranging, swing high and swing low. It's ranging. But if it come to this level, it's not ranging anymore. It's either moving downside. Okay. But the one I'm seeing here, what I'm seeing here is seem to be ranging. Okay. Seem to be ranging because that is what happened here, which we expect sellers to enter, but break the upper level and continue. So it's ranging, testing the high. Same thing here, break the lower level. I expect the buyers to enter, but it continue to downside, touch the level. Now it's going down. So maybe same thing is going to happen here. This candle break the level, then come back. It continue to the swing high. Definitely, this candle also break the level, retrace back. So maybe it's going to continue to the swing low, and then probably sellers might continue. Let me take one candlestick here. Let me place one trade here. Oh shit, very strong move. So this is ranging market. This is not trendy market. So now, as the market is ranging, let's see what is going to happen here. Now we are seeing some rejection. Hope it shouldn't break the level. This is not right. Okay, reverse, reverse. So, well, I didn't see weakness. The trend is down, but I didn't see weakness. So I can't expect buyers to enter. Can't expect buyers to enter. I didn't see any weakness. Now I'm seeing some weakness now. So let's see how the candle will close. Wow, break the level. Wow, you can see. Do not fall for that. Do not fall for this trade. Most trader might have go with buyers because the candle closed exactly at this level. But remember what I say, follow these 5 steps. Always look for the weak candle or exhausted candle. But this is not the weak candle. So you can't decide to place your trade. This is not the weak candle. This is the next level. The next level. See, the market didn't respect this. Probably it might go ahead and okay. I think this candle is exhausted candlestick. Let's see how buyers will react because I see buy seller's entry, and a strong candle break the level. Is still a Maribosu candle, strong red candle break the level, Maribosu candle. So I think maybe buyers will enter for 1 minute. Okay, I'm wrong. Maybe it's heading to this level, strong selling pressure. The next level is here. The next level is a strong selling pressure. Now watch and see how the market will how what will happen to the market here. You can see very strong sellers movement, strong sellers movement, strong sellers movement. Now watch what will happen here and observe if you find any weak candle or exhausted candle, just like this. But it seems the market is not respecting, or maybe the buyer didn't want to enter, or maybe market want to reverse here. You can see rejection. You can see rejection, 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 and then boom. See the candle is weak. Candle is weak. Strong selling pressure, and the candle is weak. Got ejected from this level. I think it's just like where's the trade here? See Euro USD. It's just like one trade that we took here. Or Euro JPY. I can't check. I can't find it. Okay. I think the market is not respecting this level anymore. Okay. The momentum will likely to fill the gap. Come on, it's a mistake. I should have known that. Momentum will let the price to fill the gap. This bearish momentum. I think I explained that before, but it's quite different from where is the candlestick. I think we took the trade there about how market reacts when they touch the level. I didn't remember the level, but this I think the buy should enter next to fill the gap. Okay, this was my mistake. That was my mistake. I should have known because although I did explain, I think is it Euro USD. I'm trying to bring something here so that you guys should understand. I don't know where is the trade or Euro GBP. I still can't find it. Okay. What I'm saying is that I think I explained that some minute ago. I explained that there are different ways the market reacts when they reach the level. The strong momentum approaching the level, it might likely to fill the gap or it might just reverse. But in this case, there strong momentum approach the level here. So they likely to fill the gap, and immediately they fill the gap, the buyer entered immediately. But I can't say the buyer should go up, the market reverse. But this is not a good candle for buyers to reverse the market. Though we still have some buying pressure, but we still have some upper pressure. So we can't say the buyers is going to reverse immediately. The market might still decide to consolidate for some while, for some time, and reverse. Okay, it happened like that. So I make a mistake by going with buyers here instead of sellers. Although I see the momentum, but I didn't analyze the momentum properly because you can see very clearly after sellers rejected the buyers here, the sellers entered aggressively toward this level. So I should have seen that coming that the market is going to fill the gap before buyers enter. So that was a mistake. Maybe next time I will check the chart. This are spring, because this is the normal level. This is the normal level. All these are entry, spring entry, just like a fake out. Okay, fake out zone. They are just like spring entry, because even though this is not a fake out, this if this is a real breakout, it should continue to downside. Even though the price closed below the previous level, it should continue to downside. But the price seemed to reverse. Okay, that's why it is called spring or fake out. Okay, so that is why I don't want to draw any level here, because the major level is here, the normal level is here. So I didn't want to draw any level here. Maybe probably the market is likely to create a spring, or maybe it just decide to go more down. So we don't know for that. Sure. So what we do know is that the market already reversed here. And the next target for the market to reverse, this is like a impulsive corrective, or high, low, high, and low. So if the market make correction to this level, we can expect sellers entry from this level. So be expecting some impulsive candlestick here. Impulsive candlestick, weak candle, exhausted, or exhausted candle. Okay, weak candle or exhausted candle. So if the price rises from this level to this level, so expect the market to reverse here. That is the next target to reverse. But if the market, market cannot just move the way you expect it to move, especially if your analysis is in log, or if your analysis is good, or is according to what the market want to do. The market might just decided to not respect this level and decide to come to this level. So this is the next level we should target. This, this, and this. We have already used that in the past. They are still key factor. Okay, they are still key factor, because this is support. It might likely become a resistance. This is support and resistance. It might also work here as a resistance. This is a resistance. It might also work here as a resistance once more. So those are the level you should. I don't use this level because that is for buyers level. Probably it seems the market is likely to, the way I see the candle, the market create a spring uh, zone here. So definitely maybe the spring zone is also occurring here. So that is why I say don't use this level. Use this level, use this level, and or use this level. Okay. I think I should call it a day. So if you have any question, you can ask now. Any question?
Hello, sir.
Yes.
Thank you for the class.
Yeah.
Um, I'll be interested. Though you promised us at the beginning of this year that you're going to do one-on-one with us, one-on-one trading now. $50 to $1,000.
Okay. Okay. You mean the challenge?
Yes,
Okay.
you apart from the challenge, you talked about that sometime early this year
Okay. One on one.
that you will trade one-on-one with us.
Okay.
Yes.
Let me just say, okay, by the grace of God, next month I will start a one on one trading. Like it should be
Yes,
maybe every Sunday like this, every Sunday night. Because I only like to trade on OTC than real market. So I like to trade on OTC
okay.
market, OTC market. Maybe next month we will try to trade one on one. Our next class next month is going to be one on one lecture.
Okay, sir.
So it's going to be on live trade.
All right. Okay, sir.
Uh,
Thank you, sir.
okay, guys. See you guys next week. Have a nice day. Bye bye.